You're welcome back, my dear students. Now we'll continue from where we stopped in the previous video. Remember, we stopped at other expenses. Now, we'll be looking at income tax expense. And as we have it, the income tax expense charged for the current reporting period is 60,000. However, if you look a little below down, you will see there is another income tax, which is the income tax relating to the item of other comprehensive income, which is this gain on available for sale investment. That will be considered as well. And have they been paid? Have we fully paid each of this? To know, we will go to the statement of financial position and see if there's any current tax payable, and there is. So we're going to deal with this current tax payable as well as the deferred tax liability. We're going to look at the two at the same time. So let's go to our workings to see how to determine how much of this tax has been paid. So that's simply my workings too. I want to determine the tax paid. And the first I will have is my balance brought forward for the current and for the deferred. So what's the balance at the beginning for the current and the deferred? For the current, the balance at the beginning here is 28,000, and for the deferred is 10,000. So 28 and 10,000. Then in the PRL, the tax charge and in the other comprehensive income. In the PRL was 60,000, and in the other comprehensive income was 1,200. Let's confirm it. 60,000 and 1,200. That's correct. Then we'll then determine the balance at the end, which is the balance carried forward for current and for deferred. So the balancing figure we'll have here will be the tax paid. So what's the current and what's the deferred at the end for the tax? So for the current tax is 32,000, and for the deferred is 17,200. So I have 32,000 and 17,200. So the addition of these two gives us what? So what's 32,000 plus 17,200? That gives me 49,200. So let's add this and see if it gives us 49,200. Of course not. So 28,000 plus 10,000 plus 60,000 plus 1,200 gives me 99,200, and it has decreased to 49,200. So I've paid how much? Like 50,000. That's 50,000. That's the tax paid. 50,000. So I go to my statement of cash flows, and my tax paid is 50,000. Income tax paid is 50,000. Okay. So go back to the statement of profit or loss. So I've dealt with this tax. So the only item of other comprehensive income I have here is this gain on available for sale investment, which is a non-cash item. Okay, it is a non-cash item. So with that, I've picked every item that would affect my operating activities. So I need to cumulate this. So I will have 1,582,000 plus 10,100 minus 964,000 minus 238,000 minus 7,600 minus 154,400 minus 50,000. That gives me 178,100 positive amount. 178,100. And that will be a net cash inflow, because it is an inflow. Net cash inflow from operations, or from operating, let me just call it from operating activities. So I'll be consistent across. From operating activities. Okay. So you see the way we did it. For direct method, we were just picking each line item within the statement of profit or loss, and we were extracting the cash element from it. So after operating activities, then we'll move on straight to investing activities. Investing activities. And investing activities are activities relating to investments, to the purchase or acquisition of non-current assets, to the purchase or acquisition of investment property, long-term investment, and what have you. So all of these relate to the acquisition of assets. So for these investing activities, where you get your item is from the statement of financial position, the non-current assets section. That is where you get your items from. Okay, so let's go to the statement of financial position. And the first item I can see here is intangible asset. And this intangible asset at the beginning was nil, and at the end of the period is now 30,000. Okay? So that means there is an increase in intangible assets, which is 30,000. And if you look at this note 2, they already told us that this increase, that is the intangibles valued at 30,000, were acquired for cash. So it will find its way into the statement of cash flows as acquisition of intangible assets. So I will have acquisition of intangible assets, which is 30,000. And it is an outflow. So we go back, we pick the next item, and that's investment. Now this is an available for sale investment, which at the beginning of the period was 24,000. Now it has decreased by 4,000. It increased by 4,000. Now this increase, does it relate to a gain on remeasurement of available for sale investment, or does it relate to an additional acquisition of available for sale investment? For you to know, let's go and look at the statement of other comprehensive income and see if there is any gain on available for sale investment relating to this 4,000. And as we will have it, there is a gain on available for sale investments, which is 4,000. And we already established that that is non-cash. Okay, it is strictly non-cash. Then the next item there is plant and equipment. And this plant and equipment at the beginning of the period was 300,000. And at the end of the period is 330,000, which shows that there is an increase of 30,000. And this increase of 30,000, what does it relate to? So we go straight and check it. We're told that there is a plant which had a carrying amount of 20,000, which was sold for 28,000. And a new equipment was purchased for 100,000. That does not answer our request. We need to know what this 30,000 relates to. We need to know, because it's not that at all. So for us to accurately determine what that 30,000 relates to, we would have to do a movement or a movement in the statement in the plant, so that we can reconcile it. So 3, plant and equipment. And this plant at the beginning of the period, we have it there as 300,000. It was 300,000. It's plant and equipment. 300,000. And what will make your plant to increase is if there is an acquisition of plant. And what will make it to decrease is if there is a disposal of plant. And also the accumulated depreciation and the depreciation charge on the plant. So that will be the depreciation for the year. And also if there is a revaluation surplus, and in this question I don't think there is. Okay, and finally would be the balance carried forward. Balance carried forward, which was 330,000. So let's start inserting our figures. In the additional information, I was told that plants which had a carrying amount of 20,000 was sold for 28. What I will put there is this carrying amount. This 28 will go to my statement of cash flows because that is the amount I received. So this 28, this 20,000, it comes in as disposal. As disposal. Why the amount you received corresponding to that disposal, which is 28,000, will go to my statement of cash flows. So sales proceeds from plants. And this 28,000, it will be an inflow. This one should shift here also. It's 30,000. Okay. Furthermore, we were told that a new equipment was purchased for 100 million. New equipment, that will be an addition of 100 million. 100 million. So that will go straight on as an acquisition of plant in the statement of cash flows. Acquisition of plants, which is 100 million. Furthermore, there was nothing anymore. So I need to put in this depreciation. Depreciation on plants, which is 50,000. Okay, they were very specific that it is on plant and it is 50,000. Okay, so let's see if it adds up to the 330. So 300 plus 100 minus 20 minus 50, that's 70. Okay, so it adds up. So the only cash movement is just this and this. Alright, so that has been resolved. So let's go back. Then, that means I've treated these items. And remember, this has been treated also. It has been treated also. We have treated this interest receivable. What I've not touched right here is this prepayment. I've not checked this prepayment. And what does it relate to? What does this prepayment of 3,000, because it increased to 3,000, that means it will correspond to an addition. Should have treated it in the operating activity item, because when you prepay, that means you paid for something in advance. You paid for something in advance, so you pay an additional 3,000. So we just add it here. Increase in prepayment. Okay, so with this now, I've touched every item in the statement of financial position under non-current asset item, and even the current assets, due to this prepayment I have not touched, because you need to shake every item. So now, this cash, you won't touch it, because you will need to get this 113,100 as the balancing figure. We will come back at that. Okay. So, let's add up. Let me check again. Okay. So, let's add up. So, let me cumulate all of these items. And that's 30,000 plus 100,000 plus 3,000. So, I added all the ones that are in jacket. Now net it off against this 28,000. Then that gives me 105,000. And this 105,000 will be an outflow. And it will represent a net cash outflow from investing activities. After then, we'll have financing activities. And the financing activities are activities relating to the obtainment or the raising of finance, either equity or debt financing. And the activities that would show in the statement of cash flows, we are going to get it from the statement of financial position under the equity and liabilities section. So we'll go to the statement of financial position under the equity and liabilities section. Then we'll start picking the items one by one. Remember that we have picked almost all these items. We have touched this, and this. So we are left with this. So the first item here is the long-term borrowings. And these long-term borrowings at the beginning of the period was 120,000. And at the end of the period is 140,000. So that means we took a loan during the year of 20,000. And that is confirmed by this additional note 3, that told us that borrowings of 20 million were made. So there is a loan that was obtained, which is 20 million. So I will have a loan as 20 million. It is 20 million. It is an inflow because we took a loan. Money is coming in. After that, we'll have share capital, and you will see that there is no movement within the share capital. No movement at all. So no cash element. Then, we will have retained earnings. And these retained earnings at the beginning of the period was 74,300. And at the end of the period was 122,300. And the movement was 48,000. And these movements, or an increase in retained earnings, will have been as a result of the profit for the period. And the profit we made for the period was 148,000. Was 148,000. The total comprehensive income was 150,000. I did an increase in this. But this goes to retained earnings to the extent that it has not been paid as dividend. But as we will have it in the additional note, a dividend was paid in cash amounted to 100,000. Okay, so remaining this 48,000. Right, that is why we are having this 48,000 as retained earnings, because out of the 148,000 profit that was made, we paid out 100,000 as dividend. And that 100,000 that was paid out as dividend will find its way into the statement of cash flows. So we'll have dividend paid and it is 100,000. After then the last item we have here is the available for sale reserve. And the available for sale reserve at the beginning was nil and at the end was 2,800. There is an increase of 2,800 which corresponds to this 2,800 here. Okay, and this has been confirmed, this non-cash item, and these we have already treated as part of the tax paid. So with this, we have touched all the items in the statement of profit or loss, as well as the statement of financial position. All things being equal, my figures should jive. Let me go and check it. Let me cumulate these 20,000 and 100,000 will give me 80,000 outflow, which I will name net cash outflow. Net cash outflows from financing activities. Net cash outflows from financing activities. Okay, so let me now do reconciliation of cash and cash equivalent. Reconciliation of cash and cash equivalent. So cash and cash equivalent at the beginning, and the only cash and cash equivalent we have here is the cash. Let me see the way they expressed it there. Is the cash at bank. And the cash at bank at the beginning, as we have it here, was 120,000. So I will have 120,000 here. $120,000. Then the cash during the year, it should correspond to that movement of 6,900. But I need to confirm. So I have here 178,100. Then minus 105,000. Then minus 80,000. That gives me 6,900. That means we're on track. 6,900. And it is an outflow. So the cash and cash equivalent at the end is 120,000 minus 6,900. What does that give you? It gives me 113,100 as our cash for the period. which is confirmed from the statement of financial position as 113,100. So we have solved this question. So I've done my own part. What I need you guys to do is make sure you watch this video over and over again until you understand everything I'm saying. If there is anyone you don't understand, please feel free to contact us. When you have understood it, then you need to be able to solve it yourself. From A to Z. Everything I've done, you must be able to do it yourself. Good luck as you do it. Cheers.